Okay, all right. Can you guys see this? All right, so first one. Assume that Global Cleaning Services perform cleaning services for a department store on account for $180. How would the transaction affect Global Cleaning Services accounting equation? Okay, so one of the important things with this is to realize who we are, who we're doing the transaction, who we're reporting the transaction. I've noticed that with students too. Sometimes you confuse, you're like, wait a second, you know, from what perspective am I doing the transaction? Okay, so in this case, we are global cleaning services, right? So we're doing the work, aren't we? Okay, so how do we show that we've done work? Don't we record revenue? Revenue shows that we've done work. Okay, so it's going to increase revenue, which increases equity, right? And then it says we did it on account. So does that mean we actually received cash? No, we just received an IOU, right? And so we call that in accounting accounts receivable. So our accounts receivable are going to increase, which accounts receivable is an asset, right? We have future value. And then our equity, our service revenue, is going to increase equity. So then we just kind of go through and look at that. So liabilities, no, we don't have an obligation. So really, we don't need to do anything with liabilities. Increase both assets and liabilities, no, right? Increase both assets and equity, yeah. Okay. So B is the correct answer. You got it wrong. What did you select on that? So we're just trying to learn from each other, right? So if you missed it, what did you do? What one did you select? We can talk about it. Don't feel bad. Go ahead. Oh, okay. So you were thinking of it from the other person, the department store. Yeah. Yeah, let's think, how could we help with that? Well, assume that Global Cleaning Services perform cleaning services for a department store on it. How would this transaction affect Global Cleaning Services? What's accounting equation? It does, yeah. Right. So I guess the question is, how did you keep it straight? Or did you? Yeah, good. Good. Okay. Cool. Does that help, you think? Help maybe on the next one. That's a very common question. Like you'll see, obviously it won't be the same question, but it'll be something very similar. Okay. Good. Which of the following accounts is a liability? Okay, so when we see the word liability, we think to ourselves, future obligation, or this is something I'm going to have to do. Right? So accounts receivable, is that something I'm going to have to do? No, that's a receivable. That's something I'm going to receive. Well, that's an asset. Service revenue, is that something I'm going to have to do? No, that's something that I would be doing like right now, right? We think of that as earning. Okay, so it's not that. Unearned revenue. Okay, I think we talked about unearned revenue, didn't we? So what unearned revenue is, let's pretend that I'm the lawn boy. Okay, I mow lawns for all of you. All right, and one of you is just super wealthy. Let's say you. I don't know. I'm sorry, but he's like, hey, you know what? I'm going to be gone all summer. Why don't I just give you $5,000 to mow my lawn this summer, and then you just hand it. Okay, that way I don't have to worry about paying you during the summer or anything like that. I'll just pay you up front. Okay, so I received that cash, right? But right now, today, have I mowed any of his lawns? Not a single one, right? So I have all this cash, but do I also have a future obligation? I do, right? I either have to mow his lawn this summer, or you're going to want your cash back, right? Does that make sense to everyone? So the debit is going to be the cash. The credit is going to be increasing a liability. And in this class, we call it unearned revenue. Okay? It can also be called deferred revenue. But it's a liability. Okay? Does that make sense? Does it make sense why it's a liability? Because I haven't done any work yet. Okay, so I have a future obligation. Cool. So that is that's the liability, unearned revenue. Okay. Why isn't prepaid expenses? Why isn't that a liability? Beautiful. It's an asset, right? So if we prepay our rent, okay, our cash is going to go down, but an asset, prepaid rent or prepaid rent expense, that's going to go up, right? Because now we're not going to have to pay rent in the future. See how it has that future benefit to us? Make sense? Good. All right. Salaries payable account is, I'm going to call on someone. Where were we at? What? I think I was going through cold calling, right? Last time we were here. Where did I stop? I think I made it to you. You sure?
Yeah, we're going this way.
Oh, he's going this way?
Yeah.
I thought you. Did I do? I did? How can I trust you? Yes? You sure? Oh, there we go. See that? Good. Okay. So salaries payable account is beautiful. I like it. Okay, yeah, because liabilities have normal credit balance. Good. Did any of you write your little AED? I like it. Good. LRC. So you can keep track of, the ones on the top all have debit balances, the ones on the bottom. You guys remember that? AED stands for assets, expenses, dividends. Those all have debit balances. LRC, those all have credit balances, liabilities, revenues, common stock. Good. Awesome. Okay. Your business purchased office supplies of $2,500 on account. The journal entry to record this transaction is as follows. What do you think? Okay, purchased office supplies. So what did we receive? Beautiful. So an office supply, do they have future value? Yeah, for sure. So they're an asset. So they're going to go up. How do we get assets to go up? Oh, no. Do we debit them or credit them? What's that? Debit. There you go. Debit. Yep. So debit means over on the left. Correct? Okay, so our office supplies are going to go up. And then what else is going to go up? Good. Because we bought it on account. All right. So we owe them that money. We need to pay them in the future. So A would be correct. Good. Okay. Awesome. Number 5, explain how the following general journal entry would affect the accounting equation. Okay, if equipment is debited, accounts payable is credited. So how would that impact the accounting equation? Okay, good. Why? Explain what's going on. How did you come to that?
So you receive equipment. So
Okay.
you have to increase.
Good.
And then paper on account. So your liability goes to
Everyone good with that? That was one thing I did, right? Okay. So you ready for number 6?
Yeah.
For revenues, the category of account and its normal balance is A. Okay. Beautiful. Good job. Everyone good with that? Hey, remember that last class, the last time we met, that was like the most important class. Oh, you okay? All right. Number 7, which of the following accounts would normally have a debit?
See.
Okay, why? Yeah, good. So it's an asset, right? It's going to have future value for the company. Beautiful. I like it. Number 8, what is the balance in cash? Okay, I haven't done this one, so let's go through and work on it with each other, okay? So we received $9,000 of cash. What's that going to do to our cash? Increase it. Good. So we're going to increase it. Paid the first month's rent of $900. What's that going to do to cash? Increase. Good. Purchase equipment by paying $3,000 cash. What's that going to do to our cash? Increase. Beautiful. Purchase office supplies for $730 of cash. That will increase. Good. Bill the client for $10,000 of design services completed. Does that do anything to our cash? No, we've only billed them at this point. It didn't say that they paid, right? Okay. Received $7,900 on account for the services previously reported. Now, what's that going to do to our cash? Increase, right? Good. So it gives us B, 12,270. Okay, everyone good with that? Okay, cool. Number 9. This one we haven't really talked about yet, all right? So we've talked about journal entries. Remember, a journal entry is always on one side, on the left side, that's going to be your debit, okay? And you always list your debit first, and then you're going to indent, and you're going to list your credit, correct? Everyone's good with that? Okay. Now, with a T account, pull this up real quick. Okay. A T account is the same concept, but now we're just going to have one account for a specific thing. So it could be for cash, accounts payable, revenue, expenses, whatever. Are we almost done, right? 6 minutes? Oh, okay. So anyways, we'd have whatever that account name is. And then every time that there was a journal entry that impacted that account, then what we would do was called posting. Okay, so we would post from that journal entry into the T account, and we would keep it, you know, if it was a debit in the journal entry, we would keep it a debit in the account. Okay, and really all it means is debits are on the left. Okay, so everything that's a debit is going to stay in the left part of that account, and anything that there's a credit is going to stay on the right. Does that make sense? Okay, sweet. So on this one, let's look. So anytime you see a problem that has a ton of information like this, you might as well jump down and find out what it's really asking before you read the rest, right? So it says at the end of the month, all journal entries are posted to the ledger. Accounts receivable will appear as which of the following? Okay, so it's talking accounts receivable, which is an asset, okay? So if you think of AEB, assets have a normal debit balance. We know that it has to end up with a debit balance, okay? So really, you can get rid of A and B because those both have credit balance. You see that? It can't have a credit balance because it's an asset. Okay? So that's the first thing. Now, the next thing, we just go through and we look for anything that's impacting accounts receivable. So the business receives $25,000, cash issues common stock. No, that's not receivable, right? Business purchases $800 of office supplies on account. Okay, that's talking about account on account, but are we receiving that or do we owe it? We owe it, right? So that will be accounts payable. That's a liability, not an asset, right? The business purchases $4,000 furniture, you know, business renders service. Here we go. So we're doing work to various clients totaling $17,000 on account. That's good, right? So that would increase our accounts receivable by $17,000. So we want to put that over on the left side of the T account. So really both C and D, we're good so far on it. Like either one of those could be good, okay? Business pays $2,000 for salaries expense. Okay, obviously that's not going to be receivable. Business pays $800, that's not going to be receivable. the business collects $3,000 from one of its clients for services rendered earlier in the month. Okay, so think about that. The journal entry is going to be, we're going to credit accounts receivable to show that we're reducing it, right? Does that make sense? They don't owe us that money because they paid it. So we're going to credit accounts receivable and debit cash. Does that make sense? Because we've received cash from them. Okay? And so it's got to be, so we have a debit of 17,000, a credit of 3,000, which gives us a balance in accounts receivable of 14,000. Cool? Does that make sense how posting works? Okay, excellent. All right. So what I want to do now is I printed off more questions than I needed to, but let me give you the rest of the study guide. Okay. I would strongly encourage you to start going through the test. The test is soon, right? Isn't the test Monday? Yeah. So these tests will sneak up on you. We do a lot of tests. Let me think. I'd like to pick up your quizzes too. So put the number that you got right on the top. Okay, be honest with me, right? This isn't where points. If you put the number that you got right, I'll collect them. Now we're being dishonest about. That last one, I mean, we did that together anyway. Yeah, maybe you can do this. So this has the same questions on, right? So you can redo it and just need to. Maybe good for you to deal with that. Okay, you guys report that. Okay, so remember the last question. Just give that one to you. So don't mark it wrong. Gary, my friend. Okay. I'll just have it. Okay. Go to repeat questions. Hold on. Any other questions? You guys still okay? About the class? Still okay about the test coming up? Okay. Remember, this is the most fundamental material. So please understand it. If you're not understanding, just come to me. I can help you get it down. I guarantee you. 5 minutes. Anything else we want to do for? So on Friday, I think we'll go through these, we'll answer any questions you have, and then I think I'll probably have that other set of questions. I don't think we really have it as agreement. Did anyone already do it?
I don't remember the last time I ate it. Are you looking at it?
Okay. So, okay. No, you're good. So it said for the last bit on like the number 8 problem where we were like adding up the balance in cash, it said received 7,900 on account. And I included that in taxes as like I guess the right answer, but like it was on account. So
Yeah, it's goofy wording, right? So
Okay.
receive 7,000 on account for the services
oh
provided.
that's why okay, 'cause
previously
it was
total.
already on account and then they
Yeah, exactly.
okay, good. And then how about the question about